So, professional skepticism, the first thing is we need to know exactly what is this when we talk about being skeptical. Then we mean to have a question in mind, okay, and that we're always alert to any possible material misstatements. So we question everything, which basically means we have to be critical. We have to critically assess, make a critical assessment of the evidence. Okay, so how do we do this? What are we really looking for when we're being professionally skeptical? Well, we're looking for contradictory evidence, particularly from management. So management say one thing, whereas the evidence says something else. So we're looking for contradictory evidence. We're always thinking of possible fraud conditions, and we'll look at fraud in a bit more detail in a second, and also the possible need for more procedures. So the idea being that the management tell you something and you try and get more evidence from it by doing more procedures. So we're questioning everything they do, we're alert to any mistakes they may make, and we're also alert to any falsehoods as well. So there's a big link to ethics with being professionally skeptical, because we need to show professional judgment and we need to show our objectivity and our independence, and we can do that by not accepting everything that we are told by the management. We can be a bit more skeptical. And then the other thing is quality, the quality of an audit. And basically, if you don't have professional skepticism, if you don't question things, if you don't look for contradictory evidence, then you have no quality. You have a poor quality audit. So professional skepticism then, why do we do it? Overall, it's to reduce detection risk. That's us, that's our job, isn't it? To detect things, and so therefore to make sure we've detected all the material misstatements. So by being professionally skeptical, we should reduce that detection risk. Let's move it on a bit further then and think, well, how do we do professional skepticism? And I want to take you through different stages. So stage one would be, should we accept the client in the first place? You want to be professionally skeptical there. You want to be thinking about, does the management have integrity? Are there any ethical threats to my objectivity? Okay, so we're skeptical at the very stage. We're making those judgments immediately. Then also at the planning stage, when we assess risk, we need to be professionally skeptical there. For example, we're doing some analytical procedures at the planning stage, which must be done, and then we don't just accept management's explanations of them. Okay, we have to go and have a look for more evidence. And talking of getting more evidence, so when obtaining evidence, that's another time that we should be professionally skeptical, because we are looking, particularly when there's judgments made by management, we're looking for the risks of fraud, and we're looking particularly when management refuse the auditor's access to information and books. Finally, we do it when evaluating the evidence. So even once we've gathered the evidence, we then evaluate it with our professionally skeptical mind, and we are alert to contradictory evidence again. That's what we're looking for when we're trying to see whether this is sufficient and appropriate or not. Now, just want to move on then to some specific applications. So we've looked there in general at how to do it. Now let's have a think of specific applications. First one, when we're looking for fraud, you have to think to yourself, can management override controls? If they can, then there's more potential of fraud. And we have to be aware that the procedures Our procedures might be good for error detection, but they're not necessarily very good for fraud detection. We have to be aware of that. We have to try and design procedures to look for fraud as well. And so we're always looking for corroboratory evidence that goes in the same way as each other. Another time where we need to be really aware is on accounting estimates, particularly things like fair value assumptions. So any accounting estimates, but particularly fair value assumptions, we want to be questioning. We want to be thinking about, is there any management bias going on there? Going concern, that's a huge thing as well. Are the management plans that they've set out, are they feasible? You know, we want to be sceptical about that. And that's especially important if going concern is a doubt. Related parties, that's another one. With related parties, we're thinking to ourselves, have management identified them all? It's often hard for us to do it. So can we trust management to identify them all? And then with the transactions, we think, is there a business rationale behind the transactions? So is there a business rationale behind each of the transactions? Check them all out. Don't just accept it. Also with laws and regulations, we're looking for non-compliance. So laws and regulations are always on the alert for any indicators of non-compliance. Overall then, this is becoming a bit of a current issue. It's becoming increasingly important. I just wanted to explain why it's becoming increasingly important. Firstly, IFRSs are becoming more, in the first place, they're principles, aren't they? They're not a bunch of rules, they're principle-based, and a lot of them now are allowing a lot more judgment. So there's a lot of room for significant judgments by management, and so therefore we need to be more sceptical. Other thing is, companies getting into financial distress, they are more likely then to, there's a higher risk of material misstatement as they try and show the accounts in a better way. And obviously, financial stress, think of the global crisis in 2008, 2009. The other thing is, it's the cornerstone, it's the key, it's the foundation of quality, of a good quality audit. And it means that we must tell our staff to be professionally sceptical, and therefore it might mean a change in culture in the audit firm. You know, no more Mr. Nice Guy, be a lot more questioning, okay? And the whole idea of it is that the public has more confidence in us as auditors.